Hey everyone, welcome back. Today we're diving deep into Sundaram Finance's Q2 FY25 results. We've got their official releases, and some financial news should give us a good picture of where they stand.
Yeah, and maybe where they're headed too.
Right. I'm particularly curious about how they're navigating this tricky economic climate. We keep hearing about it.
Yeah.
Lots of uncertainty out there.
Yeah, you've picked an interesting one for sure. Sundaram Finance actually seems to be doing pretty well despite all those external pressures. Yeah. Their latest report, kind of a story of impressive growth, and they're playing it carefully, being really deliberate.
Okay, interesting. Let's unpack this. Right off the bat, I see record disbursement. Big figure. Carti's 13,768 cores. That's a 3% increase. Given all those economic headwinds we talked about, is that as significant as it sounds?
Definitely noteworthy, yeah. A 3% increase on its own might not seem huge, but think about it. They're lending more money than ever before, even as other folks are pulling back, because of all that economic uncertainty.
So yeah, this suggests they're seeing strong demand. And what's more important, they feel confident about their borrowers that they'll get paid back. Creditworthiness.
I see, yeah. That makes sense. And then there's this massive 20% jump. Assets under management, or AUM it's called, brings it to RS. 48,058 crores. Can you remind me what AUM signifies, especially for a financial services company like Sundaram Finance?
Oh, absolutely. AUM, basically, it's the total value of all the assets they're managing. For their clients, right? Includes stuff like the loans they've given out, investments they're holding, that kind of thing.
Gotcha.
So this 20% surge, it tells us that more people, institutions, are entrusting Sundaram Finance with their money. It speaks volumes about their reputation and performance,
That's a big vote of confidence. Okay, so they're growing, but are they making money? Their net profit for the first half of FY25, it's Rs 648 crores, which, they're calling flat compared to last year.
Yeah.
Something tells me there's more to this story.
Yeah, you're right to be curious. Flat profit can be, misleading. In this case, if you look closely, the press release, it points out their dividend income was a lot lower this year.
Yeah.
Compared to the same period last year. They received RRs 43 crores in H1 FY25 versus, get this, RS 181 crores in H1 FY24.
Yeah.
So that timing difference, it makes the profit appear flat.
Yeah.
Even though really their core business operations actually improved. So it's not the whole story,
Okay. The underlying story is more positive than it appears at first glance.
Right.
They're also highlighting this 23% jump in profits from operations. That seems healthy.
It is. That figure, what it really indicates is strength in their core activities, lending and investment, right?
Yeah.
Suggesting their strategy is working even with all these economic challenges.
Interesting. Now, another thing that jumps out at me, cost-to-income ratio, improved to 32.27%, down from 35.18% last year. What does this tell us about, how efficiently they're running things?
This is key. Efficiency metric.
Yeah.
The cost-to-income ratio, basically, it shows you how much they're spending to generate each rupee of income.
Okay.
So lower ratio, like the one Sundaram Finance has achieved, it indicates they're becoming more efficient, squeezing more profit out of every rupee.
Makes sense. So that's a good sign. But in finance, of course, there's always the question of risk. How is Sundaram Finance doing when it comes to asset quality?
You're right on the money with that question. Their report, it highlights a positive trend in asset quality, specifically their gross Stage 3 assets, down to 1.62% from 1.86% in September 2023, and net Stage 3 assets even better, 0.89%, down from 1.89%, down from 1.08%. Now, I know these terms can be a bit jargony. Stage 3 assets, that means they're doing a better job of managing those risky loans.
Exactly. The fact that these figures are decreasing, it indicates they've been successful in controlling their exposure to these potentially problematic loans, which is, crucial in these uncertain times. Plus, and this is important, they've increased their provision cover to 45%.
What does provision cover mean in this context? Think of it as a safety net, right? It's the amount of money they've set aside, specifically to cover potential losses from those risky Stage 3 assets.
Okay.
Higher provision cover, like 45%. Means they're prepared to absorb any shocks if those loans do go bad.
That's reassuring, especially since, the press release mentions concerns about the overall economic climate, particularly in the microfinance and unsecured lending sectors.
Right. Those sectors, they tend to be more vulnerable to economic downturns. But, and here's where it gets interesting, Sundaram Finance's strategy stands out because they've consciously avoided significant exposure to those riskier segments,
Right.
which helps to explain their resilience,
Okay, that's a smart move on their part. So even though there are, broader economic challenges, Sundaram Finance seems to be doing a good job of managing their own risk, keeping things stable.
Exactly. Key point for anyone, investors, anyone interested in understanding a company's financial health.
But even with this cautious approach, they're still achieving impressive growth. It's quite a balancing act.
It is.
Yeah.
And that balancing act, well, likely even more crucial going forward, I'd say.
Speaking of moving forward, the press release, it mentions, the macroeconomic context,
Yeah.
lower than expected economic activity. They mention monsoon disruptions and slower government spending, after the elections.
Right.
How are those factors, how are they impacting the financial services sector as a whole?
Well, monsoon disruptions, they can really hit agricultural output and rural incomes,
Yeah.
which, can lead to loan defaults and just reduce demand for financial services in those areas, and slower government spending. That can have a ripple effect, too. Delays in infrastructure projects, generally just dampening economic activity, right?
Yeah.
Which can impact all sorts of lending and investment decisions.
So it's a bit of a mixed bag. But despite these challenges, Sundaram Finance's management, they seem cautiously optimistic about the second half of FY25,
Yeah.
citing expected recovery in consumption and private capital expenditure. So what are they basing that on?
Basically, the belief that there's this pent-up demand. It'll be unleashed once the economy stabilizes. They're betting on things picking up, but they're not, getting ahead of themselves.
Okay, so we've covered their standalone performance, but you also mentioned some impressive figures from their subsidiaries and joint ventures. I'm really curious about that.
It's a fascinating part of their story. This diversified group structure, it really adds another layer of resilience, growth potential. For example, their asset management arm, Sundaram Asset Management, they saw a 24% AUM growth, reaching 76,845 crores.
Wow, 24%. That's even bigger than the growth we saw in Sundaram Finance itself.
Right.
What's driving that kind of performance in the asset management space?
Speaks to the strength of their investment strategies and the trust they've built with investors, right? This growth is happening in a market that's seen, some volatility, so it's not an easy feat to achieve.
It's not, you're right. And then there's Royal Sundaram General Insurance, which recorded a 13% growth in gross written premium, hitting Rs 2,053 crores. And Sundaram Home Finance isn't lagging behind either, boasting a 26% increase in disbursements totaling Rs 2,896 crores.
This diverse portfolio, that's a key takeaway here. It allows them to spread risk, capitalize on opportunities across different segments of the financial services market, right? Which all adds to their overall stability and potential for growth.
It's like they've got multiple engines driving the business forward. Pretty impressive. And, they're demonstrating responsible financial management, too. Those regulatory filings, they confirm the proper utilization of non-convertible debentures, or NCDs. Proceeds, I should say. Good sign. What are NCDs, and why is this important?
So NCDs, basically they're a way for companies to raise money from investors. Think of them as loans, but instead of going to a bank, they go directly to investors. The fact that Sundaram Finance, they've used these funds properly, it shows they're committed to transparency and accountability, which is, really crucial for maintaining investor confidence, especially in the financial sector.
So we're seeing a company that's not only weathering the economic storm, but they're managing to grow strategically, responsibly. Sounds like they're firing on all cylinders. But as with any company, there are always challenges, areas for improvement. What potential hurdles do you see for Sundaram Finance moving forward?
Well, those macroeconomic headwinds we mentioned, they're a real factor. While Sundaram Finance isn't directly exposed to those, riskier microfinance and unsecured lending segments, a broader economic slowdown could still impact their customer base.
Right. Even if they're being cautious, a general decline in spending or investment activity, it could lead to lower demand for their financing products across the board.
Exactly. They can't completely escape the effects of the overall economic climate. Then there's the challenge of maintaining that impressive cost-to-income ratio as they continue to scale up. Growth often comes with, growing pains.
Makes sense.
So managing expenses effectively while expanding operations, that'll be key to sustaining their profitability.
It's like a balancing act. They need to keep costs under control while also investing in the resources and infrastructure needed to support future growth.
Right. And they can't afford to ignore the competition. The financial services sector is constantly evolving. New players, products popping up all the time. Sundaram Finance will need to stay agile, adapt to these changes to maintain their market position.
So innovation is going to be key. They can't just rest on their laurels and assume that what worked in the past will continue to work in the future.
Absolutely. They'll need to keep a close eye on emerging trends, invest in new technologies, and be willing to adapt their products and services to meet the evolving needs of their customers, right? That's how they'll stay ahead of the curve, remain a leader in this competitive industry.
It's fascinating to see how analyzing these financial results can reveal so much about a company's inner workings, its strategy, even the broader economic forces at play.
I agree. It's like piecing together a puzzle. And each piece of data, each figure, each statement from the management team contributes to a larger, more complex narrative.
And for anyone interested in the financial markets, whether they're investors or just curious observers, understanding that narrative is key to making sense of the numbers and seeing the bigger picture.
It's about connecting the dots,
Right.
understanding the why behind the what, and seeing how a company's performance fits into the broader economic and industry landscape.
So we've explored Sundaram Finance's impressive performance, their strategic approach to risk and growth, and some of the challenges they might face in the future. What are your final thoughts as we wrap up this deep dive? What's the key takeaway for our listener?
All right, let's take a closer look at some of the specifics from Sundaram Finance's standalone performance. One figure really caught my eye. Net interest income growth came in at a healthy 19.4%.
Okay, break that down for me. Net interest income, what does that tell us about their core lending business?
Sure. Essentially, it's the difference between the interest they earn on loans, the loans they give out, right, and the interest they pay on deposits and borrowings. So a solid increase like this 19.4%.
Yeah.
It indicates their lending activities, they're generating strong returns, which is a positive sign for their overall profitability.
That makes sense. I also noticed they've provided a detailed breakdown of their asset quality, not just those general stage 3 classifications, but also using the specific norms for NBFCs. You mentioned NBFCs earlier. Can you remind me what that stands for? Well, why they have different norms?
Of course. NBFC, it stands for non-banking financial company. Essentially, they provide many of the same services as banks, like lending, investment products, But key difference, they don't have a full banking license. Because of that, they operate under, well, a slightly different set of regulations, including how they classify and report on their asset quality.
So is this a good thing, that they're providing this extra level of detail?
Absolutely. Shows a commitment to transparency, which is, crucial for building trust with investors and the public, really. They're going above and beyond to give a clear picture of their loan portfolio's health.
Okay, I like that. Now, speaking of transparency, they're also highlighting their capital adequacy ratio, 20%. What exactly is this ratio, and why should I care?
Great question. It's a crucial metric for understanding any financial institution, really. The capital adequacy ratio, often called CR, it measures the company's capital reserves against its risk-weighted assets.
Okay.
Think of it this way. It shows how well equipped they are to absorb potential losses without, jeopardizing their overall stability.
So a higher capital adequacy ratio means they're in a better position to handle those unexpected challenges, the economic storms, so to speak.
Exactly. A ratio of 20%, like Sundaram Finance has, very strong capital buffer, good sign for investors, depositors, and, well, just for overall financial stability, suggests they're well prepared to weather those storms and keep operating, even if some loans go bad.
Got it. So to recap what we've seen so far, they're financially sound, they're growing responsibly, and they're even managing to improve their operational efficiency, that lower cost-to-income ratio. It's quite a combination.
It is. Certainly suggests they're, as you said earlier, firing on all cylinders.
Right.
But like any company, there are always potential hurdles, areas where they could improve, right?
Right. Let's talk about those potential hurdles. What do you see on the horizon for Sundaram Finance?
Well, those macroeconomic headwinds, they're real. Can't ignore those. Even though, as we said, Sundaram Finance is avoiding those riskier lending segments, broader economic slowdown, it could still have an impact on their customers, right?
Right. Yeah. Declining consumer spending, business investment could create ripple effects that impact even the most well-managed companies.
That's it. They might see loan demand soften, or could experience an increase in defaults as their borrowers face economic pressures.
And what about the operational side of things? Any internal challenges they might face as they grow?
One thing to keep an eye on for sure is whether they can keep that cost-to-income ratio so low. As they scale up, expanding a business, often it requires additional investments, expenses. So maintaining that efficiency It'll be a key test for the management team.
Right. It's a balancing act. Keep costs under control, but also invest in the resources, the infrastructure to support that future growth.
You got it.
Yeah.
And they can't afford to ignore the competition either. Financial services, it's so dynamic, right? New players emerging, technology evolving, customer expectations changing. Sundaram Finance, they'll need to be agile, adapt to these shifts if they want to hold on to their market position.
Innovation's going to be key. Can't just rest on their laurels. Assume that past success guarantees future results.
Absolutely. Got to keep an eye on those emerging trends. Invest in new tech. And be willing to adapt. Products, services, all of it. To meet the needs of their customers. Evolving needs, right? That's how you stay ahead of the curve. Remain a leader in a competitive industry.
It's really fascinating to see how analyzing these financial results, it reveals so much about a company, how it works, its strategy, even the broader economic forces.
Yeah, it's like putting together a puzzle, right? Each piece of data, each figure, each statement from the management, it all contributes to this larger narrative.
And for anyone who's interested in the financial markets, whether you're an investor or just curious, understanding that narrative, it's key to making sense of it all. The numbers, the bigger picture.
Connecting the dots, right? Understanding the why behind the what, and seeing how a company's performance fits into the broader landscape, the economic landscape, the industry, everything.
So we've looked at Sundaram Finance's impressive performance, their strategic approach, the challenges they might face. What are your final thoughts as we wrap up this deep dive? What's the key takeaway here for our listener? So we've looked at Sundaram Finance's impressive performance, their strategic approach, the challenges they might face. What are your final thoughts as we wrap up this deep dive? What's the key takeaway here for our listener?
I think the biggest takeaway, Sundaram Finance, they're demonstrating this remarkable ability, balance, right? Growth with prudence.
Yeah.
They're not shying away from expansion. We see that. Record disbursements, AUM growth.
Right.
But they're doing it carefully, considered manner, focusing on asset quality, risk management.
It's like they're playing the long game, building that foundation for, sustainable success rather than just chasing those short-term gains.
Exactly. And in an environment like this, so volatile economically,
Right.
that kind of, strategic foresight, I guess you'd call it, real differentiator.
It makes me think about diversification, too. Not just investment portfolios, but for companies, like their structure. Sundaram Finance's group, right? They're strong across the board. Asset management, general insurance, home finance. It shows the value of having all those different revenue streams, presence in different markets, segments.
Absolutely. Diversification. Think of it as a buffer.
Yeah.
When there are economic downturns, offset losses in one area with gains in another. And it creates opportunities, too. Cross-selling, synergistic growth. Virtuous cycle, almost.
So for our listener, what's the one question they should think about as they follow Sundaram Finance, moving forward?
Most thought-provoking question, I'd say. How might Sundaram Finance's commitment to this balanced growth and asset quality, how might that position them in the long term? Especially compared to, their competitors.
Yeah.
Competitors who might be more exposed to those sectors we talked about, the volatile ones. Will their approach be a winning strategy in the years to come?
That's a great question. Encourages them to really think critically about the company's future, how their current performance could translate into long-term success.
Yeah, highlights the importance of looking beyond just the numbers.
Yeah.
The broader context, right? When you're evaluating any company.
Well said. Thanks for joining me on this deep dive. Fascinating stuff. Really enjoyed exploring Sundaram Finance's performance this quarter. And to our listener, we encourage you to, continue your own research, delve deeper, form your own conclusions. Finance, it's constantly changing. Staying informed is key. Until next time.